big question among investors is whether Apple is overbought. Stock is up roughly 20% over the last 3 months, growing nearly 4 times the S&P's rally. And while we could see a pullback, our next guest notes that the stock has been on an upward trajectory for years. And if it can break above that trend line, could be poised to hit all-time highs. Joining us this morning, Northman Traders' Sven Henriks. Sven, great to have you. People are having a field day with the chart work on this rally. What is your overall take?
Hi, Carl. Good to be with you. Well, look, we talked about in mid-June about a big bear market rally to come that would kind of create a rebalancing effect of going into the key moving averages. We were too far disconnected, and this rally has really ticked a lot of boxes. The 208-day moving average on the S&P, the weekly 50-day moving average on the Russell, and then we got the rejection. And so now it's really interesting to see how this historically plays out, because we've seen these type of big bear market rallies before when optimism comes back, shorts cover, and then it all rolls over. And that's why what happens next in the next 4-6 weeks, I think, is absolutely key. Apple in particular has been incredibly impressive, leading everything along the way. It is the largest stock in the stock market, 7.5% of the S&P, 11% of the NASDAQ 100. So it has a major weighting. But the rally was very steep. It was very narrow, and it also hit a key trend line. So not a moving average per se, but a key resistance line, and rejected from there. So principally, I would say if Apple can get above that trend line and sustain that move, defend it, then it can go to new all-time highs as if nothing has happened, right? Because the stock was almost flat on the year. But if it cannot do that, then it risks, along with the macro monetary context that we're facing with tightening financial conditions, that this all rolls over still here this fall.
Right. That is an interesting question. I mean, given its status as a general and a safe haven and the buyback and the phone cycle, is all of that in aggregate, can it compete with the force of the Fed?
Well, see, here's the thing. I mean, we are in a very interesting place here with regards to the Fed. The rally in June was accentuated by two things. One is Chairman Powell actually being interpreted to be very dovish at the July press conference, and then the rollover inflation. So the market's been rallying on a rollover of inflation narrative, and with it came easing financial conditions, which is not what the Fed really wants to see if it's serious about fighting inflation. And ever since that meeting in July, the market's been ignoring every Fed speaker that's talking about restrictive financial conditions. And here's the inconvenient truth. There's no history, none, where the Fed can beat in structural inflation with financial conditions not being restrictive. And they're not restrictive yet. Now, several Fed presidents have come out and said they need to go restrictive. And that's kind of the credibility issue, because the market doesn't seem to really believe them at the moment. And the other issue, the other inconvenient truth, the only way to really beat inflation historically, 70s and 80s, is with a recession. And then the structural market bottom, in terms of history, does not come until the Fed is already deep in a rate cutting cycle. And that's because, obviously, then earnings estimates come down dramatically during a recession. And we're not at that point yet. We're not even in restrictive territory yet.